will see you. Yeah, I'll see you tomorrow. I appreciate you being here. Looking at the wrong camera. Don't get margin called. I'll see you all soon.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Tuesday. Happy Wednesday, actually. CPI data came out this morning. It was slightly better, which wasn't a huge surprise. We were tracking this since last week, and we saw a pretty decent flush from the recent highs in this would be December, January, and then flushing back down all the way to the September lows. So, Trueflation is a third-party reading, and they're way the heck down here towards 1.32. It's going to be an interesting next couple of months, like looking at CPI, PPI, core PCE to see if there are improvements. You take a look at your Edge Finder inflation data, and we'll see that the trend is actually pausing or even going lower. So for the first time in, I believe, 5 months. So here's your year over year. So forecasted, you've got finally the nudge to the downside. So what's been trending up for 1, 2, 3, 4, 5 months has now finally broken slightly. Now it's not, celebratory levels, but the fact that it's trended lower and it was actually a forecast for a slightly lower print than previous. So your month over month CPI, this is year over year CPI core. So you're excluding food and energy here. The previous print was 3.3. This month's forecast was 3.2, came in 3.1. So that is hopefully seen as a bit of a positive. Okay. The month over month CPI core, previous was 0.4, forecasted 0.3, came in 0.2. That's a positive. Your month over month headline CPI, previous is 0.5, forecasted now 0.3, came in 0.2. That's good. And then your headline CPI year over year, previous 3.0, forecasted 2.9, came in 2.8. So this reading overall is pretty positive, which is not a bad thing. Now, I think price action ultimately is going to determine whether or not this is a way to carve out lows and see the market relieve a little bit of the pain and stress that it's caused the last 3-4 weeks. I think this is pretty simple. Looking at the Mag 7 today is up around 3, or semiconductors up around 3% today. Yeah, 3.3%. Mags is up like close to 2, not MAGA. Ugh. Mags is up around 2%. We had the close yesterday, up around 2.6%, still holding that gap slightly. This would be an important one to watch. If the mags can close back above the 200 moving average, I wouldn't be surprised if this is just another kind of swing. I think the easiest trade right now to look at, if there's any hopes of a pullback, would be we just have to look to carve out these lows. Okay, so all I did was took a Fibonacci swing from high to low, and that was based on yesterday's low. So we did poke lows yesterday and then rip off those lows a little bit. So I've got a 613 high and a 552 low. So percentage-wise, that is your 10% correction. In fact, it's like right at 10% or pretty close to it. So right at that level, right around that 10% correction, like almost scary, like to the decimal point, we're pretty much at a 10% correction. So if that's a technical spot, the market's interested in saying, okay, good enough, it's a correction. Maybe that is a spot to build off a low. That's why I put a fib on here. So a high to low and a 23% pullback is very shallow but very attainable. A 30% pullback is a Gann level but oftentimes what I'll see with a GAN level is the price will be tested, and that's a really key spot to see if the market's going to come back and retest the low. Okay, I don't necessarily want to be short there, because if that GAN retracement level fails, then we're talking back into the 382 or back into the 50 pullback zones. And if you look left on this chart also, this structure right here, previous low, little choppiness around this area, little indecision right there, gap during the election, okay? That's where I see price as a potential pullback. So this whole conversation I've had about de-risking and getting out of some crappy positions, or in the short term, looking at some bullishness, all of it qualifies. If I'm doing short-term bullishness, my profit target is going to be somewhere in here, right? My de-risking is if price comes back in this area, whether the broad market responds and correlates, really nicely. If the indexes pull back in this zone, I want to trim some of that exposure. Make sense? Okay. So that's where I'm at. But for right now, price is pretty calm on the day. I do have a broken wing butterfly in at 55.25, which is just below yesterday's low. I'm going to see if price will just kind of stay here for the day. Give me 50 cents on that broken wing butterfly. I've got another trade in for $2.50, and I'm just trying to pull out 50 cents of credit and see if this market just stays relatively calm for the first like 60 to 90 minutes of trading. So right now my yeah, I'm close. I've got a 250 credit trading for about $2.25, $2.30. I just need a little bit more time, hopefully, in the trade. And then my broken wing is going to be something I'll manage towards the end of the day, but I'm looking to see if price just stays away from yesterday's low. That would be nice. I am watching the futures market pretty closely this morning. It's an interesting mix. Let me get this out of the way. The S&P, and this isn't like perfect, but I looked at the 830 candle as a potential range. And I probably need to make more of the adjustment out in 30, because ES has broken a little bit lower, but Nasdaq has not. So it's almost as if Nasdaq's up around 1.18%, S&P is only up about 0.4%. So I think it's because Nasdaq took the hit a little bit harder. We were down like 13+% on the Nasdaq, right? So same thing applies on QQQ. Take a swing, high to low, and your correction should be around 13%. Yep, 13.7% from high to low. So that's about a 541 all the way down to 466 or 467. And again, look at your simple levels. 23% level, 30%, 38%. I mean, that's a very shallow window for price to pull back. As far as if looking left, this area offers some decent structure around that 490 to 495, or a really nice spot would be pulling back towards like the 50% zone, which is back in here. So again, de-risking would be if price is coming back into this level conservatively, de-risking or taking some near-term profits. If we pull back a little bit more, de-risking and taking some profits. So anywhere between about 490 and 510, but a 20-point window on the QQQ. I would get out of trouble. If you've got some overexposure in tech, I would just try to do some work and get out of trouble. Okay, so I just did that actually. BGP was asking, can I just apply the same logic? Yep, and that's exactly what I'm doing. So that's what I'm watching for. We just want to see if the market is capable of carving out some lows, not making fresh lows. A gap higher today certainly helps, but don't be shocked if the market ends up trying to fill this gap, but doesn't take out the lows, and then it uses that as a rally point. So just watching technicals. You want to get into the nitty gritty of all these levels. I mean, go down to your smaller time frame. Okay. And if price is going to pull back into this close at all, if this is just like a slow move, you could look for a trend line break, see if price wants to break and go higher. There's a monster gap up here to get filled, and just know your fib numbers. So you can do this on a smaller time frame. Smaller time frame. Take your fib from the high, go all the way down to the low. And this is not perfect, right? Like this may not be like the exact high or low, but I mean, within reason, I think this would make sense that there's my 30%, there's my 38%, there's my 50%, and just watch and see how price behaves. Because if we I mean, look at the, I mean, for short-term trading, look at the asymmetry here. If I was buying it right here and I put a stop loss below the lows, okay, I have a 1-to-1. This would be around the 30% pullback zone. That's about a 1-to-1, maybe slightly in favor of the push to the 30%. But if we get to a 38%, okay, we get to a 50%. Now you're offering, if this is my risk, if we can get through this level, this is offering more reward than risk. This is offering more reward than risk, and so is this. So your bigger win to be protecting profits would be once you hit that kind of asymmetry. Once you hit that surplus of reward to risk, then you're in good shape. But the important thing is, can you find that trade? And sure, just hit my take profit on SPX. Excellent. That was a nice little winner. I'll take that. So that's trade 1 on the day. Trade update. Trade 1. Trade 2. $2.50 credit, $2 debit, closed for $2 debit. Okay, so taking the winner right there, not bad. Good. All right, does that make sense? So whether you're looking at the Qs or you're looking at the SPY, same logic applies. I think this is a pretty good opportunity to look for at least a near-term bottom. Some trades that I'm in, the trades that I'm posting, I'm looking for this pullback. So on the SPY, this was pretty inexpensive. It wasn't awesomely priced, but I did a 556 by 566 bull call spread for $5.75. So what that means is that's my max risk. But I bought this in the money, and right now it's trading. I should have maybe $1 of profit on this trade running right now. But I'm looking to see, this is out to the 321 expiration and the 328 expiration. So I want to see if there's any recovery here, if I can get a few bucks out of this trade. So right now, let's go SPY. And here is my March 21st. So my 555 by 65. And this is going to be I'm just going to call this a bull call combo. So bull call combo. So the 555 by 65. Actually, let me separate these even more. I'll go ungroup and just do 2 of these. So bull call spread and a bull call spread. So this one I paid 570. This one I paid 570. And I just need to see if price will get, intrinsic value wise, I mean, we're trading around 557. So real value on the trade, I have around $2.50 of value on this one. And I have about $1.60 value on this one. But that's not until I actually have expiration. So right now, if price were to stay where it is right now, I'm still making money on the trade, which isn't the worst thing. Actually, you know what? That's not true at all. Sorry, I thought I was taking the trade at 550, but no. So 555 plus my debit. So my break even is going to be around 560. For me to have profit on this trade, I got to see price around 560 and around 561. So if I'm in for 575 and I've got a $10 separated spread, then $10 is going to be my max profit. So for a 575 debit, I can make $4.25 max profit, which isn't bad. It's not bad. I mean, return wise on that would be 4.25 out of a 575 debit. That's a 74% return on risk. So not awful, but let's see what price gives us. Okay, right now we are starting to see the ES futures feed is still pushing below that 830 candle. NQ is starting to break. I'm going to see if this is a fake out. We're just past that opening bell range. So watching some key levels here today on SPX. Hopefully market makers are going to defend. Hopefully market makers will be defending this like 55.50 area, or just defending the close from yesterday if it bounces around. Okay, are we going to retest? The question I'm asking you is, are we going to retest this low? Hopefully not. That's another, 300 points lower. I mean, anything can happen. We've obviously had some huge daily swings these last 3-4 weeks of trading. If I were to go short futures, if there's a breakout there coming, but I'd probably stay out of it. So I think this could be a pullback into this range. But if we're going to short, I mean, the stop loss would be pretty tight. If I short it here, I want to see stop loss. And I probably trade MNQ versus NQ. I just want to do micro contracts here. But I'm not going to take the bait unless I see a confirmed breakout. Okay, 19446. That's a daily pivot. Gotcha. Yeah, I can see that. So we're sitting at the weekly VWAP right now. I just want to see a more convincing breakout. This is my 830 candle right here. That candle, that candle. So ES is slightly below that. NQ is right at it. So, all right. Let's go a little bit more top down. I'll come back and revisit futures. I'll keep my fibs on the Qs. I'm watching SPX in the morning. I'm going to set a chart alarm down here at 55.25. And that is a broke wing butterfly pin price. Hopefully we're not going too much lower than that. Today's high is around 56.41. So that would be a move lower by about 117 points. Now that's very possible. We've had some pretty big flushes. If you look at these high to lows intraday, I did see, I think it was Monday was like a 200 plus point day. Monday was a nasty day. So Monday we had the intraday pricing going down about 140 points, but the gap lower on top of that was about a 206 point move. So it did end up snapping back like I think 50, 60 points. But from previous days close down to 207 to then a close around 160, it's like that was a pretty big intraday swing. So I'll just keep an eye on it. All right. So there's where we're at. Let's go VIX. We're starting to see the volatility index retreat a little bit. Not a ton. This isn't just getting smashed to the downside like we'd love to see, similar to what we have here. I mean, when the VIX has these big days, it's followed by monster red days. So up a ton and then very quick, reversion. We're not quite there. Like this is still, I don't know. I mean, is this like a slow grind? But we're talking about levels that we really haven't seen in a while. I mean, this was a one day VIX was like December 18th was Fed day when the market took a huge crap. But that one day spike was met by all-time highs again like a week later, or not all-time highs, but a retest of that entire FOMC level. But that was like the largest single day spike after August 5th, which was the largest single day spike in like 30 years. This has been a very persistent VIX. Okay, look at this level. I'm just going to note current price around, let's go 25.97. The last time we were this high outside of our outliers of December 18th and August 5th, we're talking about a correction coming in the end of March and early April of 2023. We're talking about a end of October 2022 and bear market territory in all of 2022, which for 9 months was a legitimate correction. So I mean, we're hitting levels that usually mean, much more trouble ahead. But, all of these were what was down in the market, pulled back. Okay. What was down in the market again, pulled back, down in the market again, pulled back. That was all of 2022. Currently, this little persistent slide has led to just one big correction. All we had was about a 1-day pause in here, but this was a pretty much flush for 10% in the S&P, about 13 to 14% in the Nasdaq. And if there's any bounce, that's what I'm looking at in the short term. Okay, but it's probably not going to be easy. Pay close attention. All right, so keep an eye on that chart alarm is set. Let's keep moving through some other items. Yesterday, I was looking at SVXY for a potential buy opportunity. I still like this trade. But what I discovered is if I wanted to own shares of SCXY, even in a margin account, even in a portfolio margin account, it is not treated with portfolio margin. It's treated like it's cash. So that's what I didn't love about this. And if something were to happen where this is going to go through my August 5th low, I'm probably going to get in more trouble than what I want. So I'm just going to stay out of it for now. I do like this instrument. But I've got to be a lot more confident that we are putting in some lows and we're going to start carving out some higher highs. And right now, I'm just not there. I think this market going down for this first little leg, I think this market going down, trying to carve out a low, offering a little bit of relief, this is where the bulls and bears are going to have to fight it out. Okay, I saw that this morning Goldman Sachs adjusted its end of year target from 6,500 down to 6,200, which is just above the highs. And I mean, I take that with a massive grain of salt because Goldman Sachs is terrible at forecasting. But I would say that most expectations are if this market gets back to the highs by the end of the year, I'm sure there's going to be some happy investors out there just to show that they withstood the pain. If you, kind of dollar cost your average way through it, you can survive it and still maybe carve out a couple of gains this year. But anyway, just a revision downward, and I'm curious how many other kind of analysts and expectations are adjusting as well. We did start the year off around 5,900, so that's not a huge gain, right? If we go up 300 points on the year for a $5,000 instrument, not a huge gain. But it would certainly be better, like if we're down, 10%, that we can carve out a way to get back to like 11, 12, 13% to the upside and at least, finish positive on the year. So we'll see how it plays out. All right, VIX. Like I said, not retreating a ton. And I think the hardest thing would be if VIX continues to stay persistent and consistent. That would not be a good thing. I still think a correction is due in the near term, but if we see more pain to the downside and we see a higher VIX, I mean, it's just a bigger deleveraging. It's a bigger correction. I'm looking at JNK, which continues to make some fresh lows. If you look at LQD, was it LQD IW? Something. It was some comparison, but LQD heading lower. But JNK is kind of my primary gauge of if we're seeing widening credit spreads, that's triple A's, triple B's, triple C's. You got to keep a close eye on this JNK. This thing has been dropping over the last, 2 weeks or so. Last 2 weeks of trading. I'd like to see this thing stabilize. If we are going to see this break some recent lows and start to head lower, this is more concerning. Like this means wider bid-ask prices. This means what's going to feel like less liquidity in the markets, and that's probably not great. So again, a lot of things to watch. VIX is one of them. JNK is another one, and obviously just your typical price action. All right, let's go dollar. Dollar. It is what it is. I'm not interested in the dollar at all. If you want a dollar cost average into this, I don't think this is a bad spot because we have such an inefficient fall here. If you're willing to trade the dollar small enough, which I don't love this trade, but if you were to go dollar strength here and try to get a little pullback, I would say dollar strength to like just look at this entire area. Okay. If you went trade 1, trade 2, and trade 3, all you're doing is you're leveling into support. Okay. Now, do I think this trade is too early? It feels like it. I don't love this because why would we turn at 103.59? I have no idea. So I don't really love this trade. But if we came back into this initial breakout point where we had back in September, October's, like this was a little bear trap, and then we had that October breakout, this entry I think would be pretty good. So you start there and then have a reserve entry and see if this market is actually going to pull back. So I will say this, if I'm going to trade anything on the dollar, it is probably here. Look to see if I get some type of efficiency play around the 102 to 102.50 handle. So that'd be trade number 1, and then reserve a second position for the lows. And that would be 2 small trades. Look to see if I can spot a bullish pattern off these lows and then try to pull back into this candle. Right? So there's 2 ways this happens. Either one is this continues to flush lower, all right, and I get the trade that I want, or 2 is this pulls back into this area in the near term, and that becomes another opportunity to then look to short the dollar. Right? Like this to me is where this market would be finding some efficiencies and pullbacks. This is a big one-sided move. So a pullback here that hits some resistance would be a good opportunity to look to short again. And then take it down into this level. Right? So there's a couple ways to look at it. If you get a brief pullback, that's fine, but I'd like to short that move. If we just continue to fall and flush lower, then I'm looking at this area to buy, trade 1, this area to buy, trade 2, and then see if this market wants to build a position, form a low or form a bullish pattern, and then work its way back up into these candles. And that, to me, position wise on Forex would be a pretty good trade. Okay, oil, 67. I think there's that potential bounce in oil, but let me take a look at this one. If this is reasonable, current price in oil futures, how far out would I go? Maybe into May. So if I split the difference, I can do a 1-for-1, spend 250 to make 250 if price is above 67 bucks. That's on CL. So if there is a bounce here, it's a fair trade. It's risk reward. My concern is that this floor just doesn't hold. It's been tested so many times since 2023. This is early 2023. I could see a bounce. Makes sense technically. But if it breaks, I just see us sliding into 60 or 55, and it's a silly trade. So I don't feel like calling the low. So I'm just going to stay out of it. But if anybody's like crazy short term, that might not be a bad spot. UNG at 22 bucks. My sell side of this is 23. So I'll be watching that one closely. Gold, not a lot of activity here the last 4 or 5 days on gold, but still maintains a bid. I still like buying dips if we get them, 2,800. I'd said on gold, because of this stretch away move to the 200 moving average, if we make a high in gold, I'm not going to call the top, but I wouldn't be surprised if this high is divergence where price momentum disagree and that we actually put in some type of topping pattern on gold. That wouldn't surprise me. So just be careful of a bit of a bull trap to the upside on gold. I think if we hit that round number that everyone's been talking about, 3,000, that is just going to continue to kind of prove my theory of the stretch away move that we have, plus the bar count we have. I could see a top forming in gold, at least putting in some type of corrective pattern. All the more reason, which is why I'm waiting patiently to kind of buy and scoop up some dips. Silver is actually doing pretty well. Silver has been outperforming gold in the last couple of weeks. So daily candle wise, let's go weekly candles. Weekly candles for the last 2 weeks, we've had silver looking better than gold. And I'm good with that. So we are almost at some recent intermediate highs around $33.45. I still have a trade on SLV that's looking pretty good, 28 by 27s. I got a diagonal spread out here as well. This one's got to be up some profit. Yeah, this one should be up a decent amount. Let me check on SLV. So SLV up about $2,000. I've got shares, which are up. I have my shares covered at 35, and then I have my diagonal spread, which is a $15 by $34. I bought the $15, sold the 34, and that debit. Let me go back into this trade here. So I've got the 15 by 34 is a diagonal spread. So I bought the 15, sold the 34, cost me $13.89, and the max profit here would be 19. So that's if I get it called away. Otherwise, I just keep rolling. This is out to January of 2027. So I'm going out pretty far on silver. I want to give myself a nice long window. And if it gets called away, it'd be making some fresh highs. If SLV is trading at 34, that is hitting my, symmetry target or very close to it. So I'm trying to see if this will appreciate and go, through my symmetry target, taking some profit or as much as I can out of that trade. Okay. Today, not loving this retreat post CPI. So, and I said this in a Telegram video yesterday. My concern is if the market doesn't take CPI data with a positive inflection, that there's just, these bears are just not done swinging. They're still going to claw away, but I'd like to see the market try to step in and, kind of ease the pain a little bit. So day is not done, but still, like this little 830 candle breaking to the downside, we've essentially faded everything and we're now in red, right? S&P is flat from the gaps higher. So let's go SPY. I guess it's easier to see this. So this is where we closed yesterday. That's where we opened today. Closed yesterday, opened today. The market just faded that gap. Now, question is, does the market respond to that? If the market responds to that with a green, that's good because that means we're just going gap higher, fill the gap, and then see if the bulls can step in and try to take it from there. But a flush lower is, like I said, like CPI data should be fairly well received because it's the first time in 4 or 5 prints that the market's actually showing better inflation data. But who knows? I just think, like I said, the bears keep swinging. Okay. But if it responds off that low, that'd be nice. All right, let's keep going away here. We did VIX, we did gold, we did silver. Bitcoin at 81.5. Just get ready for some chop. A risk-on rally in the stock market could hopefully help solidify this previous resistance around 74. I think if traders right now see this level continue to be defended, just building. If as long as we don't do too much structural damage to that 74 to 70,000 handle, I think a trade into this like 105 to 110 retest would be, timing wise in the near term, that would be a great trade. If you can trade LIFO, as in last in first out, that would be an excellent trade. Or obviously just buy your Bitcoin. But if you're trading this in chunks, in tranches, I like a LIFO trade here where it's like I could take another swing at IBIT, whatever, buy a couple hundred shares and see it go from a 75 to 105. Like that's a good chunk. And then IBIT would move hopefully from like 46 into like 56 area. Try to revisit those highs. But like I said, as long as we don't invalidate this kind of 70K, I'd say even if we overshoot it, I don't really want to see price go too much lower than about 70K. And I say that because this candle through the election was an inefficient candle about 70K. The previous resistance right around 74K. So I could see this area being tested, maybe a fake out, and if it closes back above, that looks pretty good to kind of build that position back up. Okay, IBIT just hanging out. 52 by 51. Let me check on something really quickly here. That's out to May. All right, I think this trade's okay. Out to May. I've got the 41 by 40. This is only out 16 days. These are all negative. Not by much, but come on. So I still have a collar trade. This is my collar trade right here. Fit 62 by 43 collar trade, and then some longer term credit spreads. All right, so the most pressing one would be my put. So this is a little, I mean, my style of trading is a 1-1-1-1, which is I bought the 43, I sold the 42, sold the 41, sold the 40. On that trade, I collected, I think, $66 of income. Yep, $67 of income on the trade. There's a profit trap of an extra $1. The assignment risk would be I'd own IBIT at $41 and $40 if price was going to fall that much lower. So far, like I said, what's price doing? Filling today's gap and responding. So far, that's a pretty good sign. I'd like to see it stay there. I don't want to see necessarily price break the lows. Okay, MSTR trading around 255. Just gonna let this one hang out, see if this 240 level holds. Keep a close eye on this one. This one is if we get a near-term rally, I think Bitcoin would be benefiting from a risk-on rally. We're trading at 188. Potentially, I would take on some short-term assignment of Coinbase, which shouldn't be too terribly difficult to repair. So if I get assigned at 190, I take a $5 bonus profit on top of that because of the 205 by 200. So I'd own this at 190 minus the $7. 188.93 would be my break even, as I've just illustrated here. So could I own this at 188.93? Well, that's about current price. If I put in a 2 to 4 week covered call on Coinbase, if I were to go out, let's say 2 weeks or so, anywhere between like 11 to 16 days, that would be worth, and at the money would be around a $12 or $13 covered call. That's pretty easy to repair. If price just stayed where it is and I collected $13 or $14 on it, then for 100 shares I make $1,300. There might be a bit more value if I went a little bit deeper. So I'll see if I take the assignment near the 28, then I'll assess. But hopefully price isn't going to drop too much lower than where it currently is. Okay. Yeah, we'll see. Futures market is just not responding very favorably. We had the CPI news, we're breaking lower. We're going to see. We did make a slightly higher high with the gap, but price action is going to be really key today. If we take out the low, I would hope we don't close below that low. That could be a little manipulation play, like threaten again. Everyone's going to get all, I don't know, nervous again. That's right around that 10% correction again on the S&P. So just keeping a close eye on this. We have a gap fill responding, but price is just not going up, not yet. So if we wipe a lot of that away, that is market makers were looking at about a 60-point move today. And right now they've already moved about 74 points. So if we get down to fresh lows from the high, that would be fresh lows. That'd be about a 112-point move. That's almost a, I don't know, 1.5 to 2, double the expected move. It's been happening a lot the last couple of weeks, but time will tell. So I'm just going to hang in there and see what happens. All right, we're good on coin. Let's go some other markets. Copper just freaking ripping to fresh highs, not all-time highs, but fresh highs. My copper position is around $160 max profit, and right now showing about $112 profit. So I've got some of the profit locked in, about 64%. available. I'm not going to take it yet. This is plenty out of the way. So my copper trade is, I mean, I'm trading at like a 5 delta. The odds of this thing being a problem are slim. So I'm just going to collect the full income on that trade most likely. That trade is out to April 24th. Japanese yen futures retreating. I took profit on this one already. What I'm going to wait for on Japanese yen futures is hopefully a new contract series added. So if I go /6J, the only expiration I have right now is September 5th. If I want to go longer term, that's my expiration. This was my hesitation the first time I took the trade in January, which was I'm going to get long a Japanese yen futures, but I don't love it because I can only go out to September. So what I'm waiting for is, can I get more expirations? I want to be, I mean, I do want to be longer term Japanese yen long. And to me, the best way to trade it is futures or FXY as opposed to currencies because I don't want the negative swap. But what I'm looking for is, can this thing go from is it a bullish pattern that's in the works? Right? I mean, honestly, this looks a lot like the dollar yen in reverse. If I flip this over to a dollar yen position, does that not look like the dollar yen? So we broke the low, broke the low. If this is a swing trade in the works, I mean, that to me is a good looking trade. Finding a lower high, swing above, and then see if this thing wants to push towards some type of symmetry. Revisit the August lows. We go Japanese yen futures, flip it upside down. Take out the high. If this sets up some type of swing in here, I look to see if that can go higher. But like I said, if my only expiration is out to September, I don't love that trade. But anyway, we'll see. This is why I remain long on FXY. This was the July low to August 5th top. And if there's more to come, then I will run with my break evens. I own FXY around $58. So it's not a huge mover, but I do have like 1,000 shares of this. So if it gets back up from 58 to 66 or so, I don't have anything covered. I'm just letting it run. So that's another kind of bit of a hedge play for this year. DXJ DAX is stabilizing a little bit. I'm still looking for some pullbacks on DAX because of the stretch away move above the 200. FEZ, I'm just selling some premium. This is another way to play the Euro stock. This is the German, essentially German DAX. FTSE retreating pretty hard off these highs. Europe looks a little better than the UK. Germany looks a little bit better than the UK. So I would stay out of this one for right now. Argentina, not going to touch it. China still hanging out above September highs. Brazil, that's fine. Mags is fading back down a little bit. Apple hitting some fresh lows. I have an expiration for next Friday at 205. I don't think I'm going to have to take assignment there. If I did, the assignment price would be 205, but I would own it break even at 200 minus $1.09, about 198.90. 198.90 would be my break even. Would I own the shares of Apple? I would, but I wouldn't want to own it for very long. So I'd own it here about 23, 24% off from the recent highs if I needed to, and I would just try to repair it. Just try to repair it. Amazon, fading. AVGO, just above the earnings highs, fading. Google, hanging in there, but still like leaking lower. Meta, don't be surprised if we come back and find this 200 moving average. Microsoft, leaking a little bit lower. We're at 379. I've got to take a look at this one here. So I'm going to go Microsoft. So right now, this trade is maxed around 120 and currently trading around 109 bucks. Now, the nice thing about this trade is I do have a potential bonus trap here where I can keep I can keep my $1.20 on the trade. This one's probably worth it. I don't really want to tie up the buying power here. If price were to come less than 375 this week, then I would take on the assignment, which I don't want. This is close to it's close to good. Now, what you can see here is I have a 385 by 380, and that is a bear put spread that is currently up around 220 bucks. And on top of that, that's offsetting my 375, which is my line in the sand for Friday's expiration. So if I wanted to get greedy, which I don't think this is the time to do it, if I wanted to get greedy, I could hold out and see if price stays above 375. Then I have the possibility of keeping $1.20 on the trade on top of a $5 profit trap. So it is possible that I can make $6.20 on this trade if price is greater than 375, but also less than 380. Now that's a really tight window to say I got it. So I'm gonna look at it this way. I think I'm just gonna close out the trade, avoid the assignment risk, not really worry about it. And then I've got another one here that's even lower and let that one kind of work into next week. So I'm gonna see what I can close this one down for. Shows 5-cent debit. Let's see if I can close it out for 5 to 10 cents debit. Let's go 10 cents debit just above the mid price. No problem. So took that trade off. This one's fine out to next week. This one for the 14th, a 111. And close this one down for, see if I can get out of here for 5 cents debit. 7. Sweet. 5 cents debit, even better. Very nice. So I'm going to close down Microsoft. This one doesn't have any exposure. Just have some shares. Here we go. 1, 2, 3. Group this as a 111. 1, 2, 3. Hopefully close this for a 5 cent debit. Fill the 5 cents. Good. And no exposure. Okay. So closing out that for about $120 win. I do have some other trades running for next week, Friday on Microsoft. So this trade closed out for a little winner. Next week, it is the similar setup. It's a 380 by 375 by 370. So my line in the sand is if price is above 370, but below 375, that's my kind of ideal trade. If it stays where it is right now, then I have maybe like a 50 cent to $1 profit trap on top of the credit for $2.40. So this one is still important to watch for next week. It might be best to manage this one over the weekend or early into next week's trading as well as we get closer to expiration. Right, this one I just managed is only 2 days out, so I'm in that like tiny little sliver of just the final stretch. And then the other one's out to April for an income trade, the same level, 370. So, all right, I'll take that win on Microsoft. Let's keep going. Netflix, still expecting Netflix to head lower to find this 200 moving average. We have a long bar count. Meta actually, I mean, this might be a, let me see here. Meta, anything can happen, but short term, Meta to this Friday or next Friday. Let me see. How many dollars away are we from current price? So this would be a move towards, it's a 5.8% move, 610. Let me see what this looks like. If I were to do we're trading around 610. If I buy the 615, sell the 605, that is not a bad trade. So current price. Yeah, so I'm basically buying Is this the right timing though? I might have to go out a little bit farther. So March 21st, if I buy the 615, cost me $460 to make $540. That's not a bad trade. Cost me $6 to make $800. Not a bad trade. If this gets down to this like 85 level, 575 level, that's the direction I'm looking at. Can we get down to this low? Can we find this 200 moving average? Honestly, I like the trade. I think I'm late on it. The better trade was when this thing went. I don't know if anybody saw this headline, but Meta's up 20 days in a row. That was a perfect reason to short this thing, which is what I did. So now it's like, I like the setup, but that little butterfly trade and bear call spread and bear put spread, like that's been fine. Targeting this 200 moving average. I think now I'm getting greedy to like go after that final little stretch. So, and the reason why I don't want to jump in and like chase that little bit is because if all we had was red candle, green candle, and this thing pulls back a little bit, I'd rather short it on a pullback. Otherwise, if it flushes down, finds the 200, that's fine. There might be even a short-term bounce from it. So I'll show some discipline and hang out. Microsoft, this one I just closed out for a profit. This one's still running. This one's still running. Put in my allocation around 416 bucks. Just a little buy. This one closed out for 5-cent debit. So took $1.15 profit on that one per contract. I'm happy with that. That way there's no assignment risk. And then next week, it's even $5 lower at 370. So I'll keep a close eye on that one. Netflix. This one might be okay. Earnings on this one out to April. Netflix. Could I get a similar setup on Netflix? This one has a bit more space. I'm going to see if Netflix will pull back into this. Like, I'm going to get picky here, but I'm going to pull back to like this 948 level. So if Netflix, if this is a flush lower, pulls back here, still flushes down, like that's understandable. I might miss the trade. But if we have a level here and price can just kind of grind its way back to it, I might look at another opportunity to be short Netflix just to get into this 200 moving average. This one's looking good for next week, Friday. This is a 655 level. Unlikely going to get hit. That'd be $2.56 income coming into next week. NVIDIA was up to 116, fading a little bit. We're still hanging in around that like 110, 115 handle. I'm watching that one closely. This one on NVIDIA, I do have a ratio spread. I don't mind taking on some shares of NVIDIA. If it stays where it is, this is out to April, so I'm really not worried about the timing of this one. But the idea here is if it stays, let's say we just hang out and we stay around this like 110 handle. Well, this trade is pretty perfect because I pulled in $2.26. Okay, right there, 226. And if it's around 110 towards expiration, then at 115, that's fine. That's no bonus trap. But 114 is an extra dollar. 113 is an extra dollar. 112 is an extra dollar. So anywhere between like, 115, 114 is an extra dollar. 113 is an extra $2. 112 is an extra $3. 111 is an extra $4. So on top of this $2.26, I could potentially have a bonus trap on top of that. If we're greater than 110, cool. If we're greater than 115, fine. I'll just keep the income. But we'll see what NVIDIA does, and there's still some time in that trade. Okay, Pfizer. Where's Pfizer at? Pfizer at 25. Geez, wasn't this at like 27? The fuck? What the Funyun? Geez, man, Pfizer, you freaking turd. Like this stock can't do anything right. Give me a squeeze. I bought, this is out to like next summer, but man, I bought a freaking June of 2026 $20 call. I paid $7 for it, and I'm selling something for a $10 position. So it's like, can we just get above $27? I mean, if I looked at this stock, it's lower beta. Okay. In fact, it's like not even correlated with the S&P. So that's good. It has a 6+% dividend, which is fine. But my gosh, like this stock sitting down, oh, I don't know, 60% and coming back to levels that this stock hasn't seen since 2012. It's like, are we coming back to great financial crisis levels on Pfizer? I mean, we're through COVID levels. That's why I thought it's a pretty good spot to be buying. If we're at COVID levels, it's a pretty good spot to be getting into it. So I'm hoping that this stock is going to start figuring out how to stop sucking and work its way back up into what you can see me drawing a fib level. Just looking at a high to low. I mean, just give me something. Shallow pullback is $32. Okay. 30% is a $34. It's like, give me something. And I want that to be, nice little trade. So last year, Pfizer, I don't know, I did like maybe 20 grand on Pfizer last year. It was pretty simple, and price didn't even move a bunch. So I'm hoping we get a little bit more of a squeeze going into like this year. I can take this obviously out to summer of next year, but man, it's crazy what the stock like can't get out of its own way for a couple of dollar movement. So that trade on Pfizer, PFE. So there's my 20 by 30. So I'm down about $900, but my break even is $26.99, and I'll keep an eye on this. I'm looking for levels at like $32 to $34. If it gets called away for a $6.99 debit, gets called away for $10, I make $3.01 on 10 contracts. So I'd make $3 grand times 11 accounts. So it pays well, but give me some movement, would you? All right, Tesla 241, everyone's favorite. I just saw this really ridiculous revision on Tesla from JP Morgan saying that the stock's going to go to $800. I mean, believe me, I love it. So what I'm watching for on Tesla right now is this trade is out to next week. So we got up to around 251 today. That assignment price would be 255. So we'll see. We'll see if we kind of turn the corner here for the next week or so. If I have to take on assignment, I'm willing to take on assignment, but it'd be nice not to because I have other income trades out to April and May. But we'll see. So it's not a hard one to repair. Again, you can probably get $20+ for a covered call. Tesla's premiums are pretty high at a 84, 85 IV rank. So if I go into Tesla. Oops, that's CLT. Tesla. There we go. So March 21st, I have the 265 by 260 by 255. If price is greater than 255, that would be excellent because that would be a potential bonus trap. 28th, similar. Bonus trap. April 17th. May 16th. Okay. Like this stock's not done getting beat up yet. But I did sell, premium on this one out to next January, 190 by 160. I think we're going to stay above 190. I also have some short-term shares. So anyway, near expiration is here, 1, 2, 3. If it gets back to 255, then I avoid the assignment risk. But I'm trying to get $2.17 of income on top of a potential profit trap. But price needs to rally. So chart alarm is set at 255. We'll see if we get there. Berkshire pulling back a little bit. This one also, well, it's not that huge. I was going to say it's not a huge bar count. It's noticeable though. It's 342 bars. That is the same as the S&P. Berkshire might, oh man, I don't know. It might be a good top, to be honest. Probably not a good sign if it is. If Berkshire's sitting on 20% of assets in cash, collecting about 4 to 4.3%. I mean, I don't want to call the top. It's clearly divergent from the S&P, right? Like this new all-time high on Berkshire compared to the 10% flush we've seen in the S&P. I still think it needs to find a 200 moving average though. All right, TLT, just going to stay in this one longer term. I've got this one at my sell side is 92. I saw the 30-year mortgage came out today a little bit lower. 6.63 is the new revised 30-year mortgage. So we've dipped from 704 down to 663. Hopefully there's more downside left. Watching the 10-year. 10-year is still sticky around that 4.3%. So, I mean, this would be a great spot to break and go lower if possible. But if the stock market has any relief rally, we're probably going to see this thing stay pretty sticky around that 4.29. We have Fed next week on Wednesday. Just something to put in the calendar. Watching J&K to make sure we don't just break and fall off a cliff. China stock is hanging in there. Alibaba not really doing much. I mean, it obviously did plenty this year already. This has been a great performing stock. I'm happy that I closed out the shares. Now it's just a bunch of income trades and options. Baidu is hanging in there. I'm just selling colored calls really. FXI. If we get a pullback, I might trade some FXI again. KWeb, JD's at 39.87. I've got a covered call at 40 out to next Friday. I think I rolled it out there through earnings. Let me double check that here. Pfizer, JD. April. Yeah, I might do some roll on Coca-Cola. JD's right here. 500 shares covered at 40. And I've collected about 60% of that covered call. It's going to let it decay more. I don't mind this one getting called away. This one should be good for about $2,000. Let me check my break even is like $35. So get it called away. 500 shares at roughly $5 a share. $2,500 would be pretty good for a little repair. Okay, SCHD. That's Schwab dividend. Holy shnikes. Well, this one looks a little bit more attractive to buy and hold. Dollar cost averaging. That's a crazy dump on Schwab dividend. Wow. You talk about a ridiculous turn here. I mean, percentage-wise, it doesn't look like a lot, but that is a 5% dump on Schwab dividend. I don't know what stock led the way there. Stock investors go on defensive dividends. Well, it's not going up. Yep. So everyone is going to a lower beta and defensive dividend plays. It's not a surprise to see that rotation. So I don't know. It's just going to be back. It's going to be a back and forth year. I think this year is going to be a grind fest. And I think I'll let you go for today. So I'll wrap it up there. Any other charts questions? Let's go back to intraday. So here's SPX just below today or yesterday's close. We're just below that, just kind of hanging out. Hopefully market makers will continue to defend in here. Maybe just, I mean, if we have a high of the day, low of the day, we finish in the middle, that would be acceptable in my world. I would like to avoid a fresh low if possible, just to see if these markets can stop the bleeding a little bit. Okay. All right. I'll let you go. See you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.